retirement. So I'm with Victoria Gillespie of Realtors Federal Credit Union, a division of Northwest Federal Credit Union. And she's going to talk a little bit about what's called dollar cost averaging, which is simply an investment strategy that because real estate professionals typically do not have an employer-based 401k or anything like that, this is a way for you to start building your long-term retirement in a very systematic and much less risky way than you would in using some other methods. So, Victoria, first of all, explain, what is dollar cost averaging and why do they call it that?
Okay, first of all, dollar cost averaging is a nice term for taking an investment into the markets, whether it be a mutual fund or stock. When you go into the market each day, you purchase at a share price. And when you purchase each day, and there's a varying share price, so for example, day 1 it's $17 a share, day 2 it's $8 a share, day 3 it's $30 a share. When you do it systematically, you're buying little increments of that investment over a set period of time. What you're doing is averaging your share price as you enter the market so it evens it out and diminishes risk somewhat.
So it sounds like what you're saying is you don't have to be making a lot in commission income to do it.
That is such an important point. I think many people are impeded from investing, period, because they think, I don't have enough to even worry about. Well, just that thought is a fallacy. Everything, every little bit that we do now, in the earlier years of our life that we do that, we get that time on our side, that we get a compound effect over the long haul. So in this case, dollar cost averaging, most companies won't even require an initial setup, a dollar investment. They usually allow you to start with as little as $25 or $50 a month, which I think we could all make some choices to free up $25 to $50 a month. And we had talked before about a latte factor and things. Maybe you don't do 3 lattes that month and you decide to fund an investment vehicle.
So if I'm a real estate agent, I work for a broker, I'm an independent contractor, how is this particular strategy, why is it particular a benefit to me?
I think anything on the topic of retirement planning is the most common question that we at the credit union get brought up. How can I plan for retirement? How can you help me? So because I hear this every day as a request, as a need from our members, that front and foremost, anything on retirement makes it an important topic. But if you look at how the structure of a realtor's business is, they are an independent contractor to the broker. They're not an employee. So the difference means they don't get a W-2, they get a 1099, but they don't get any defined benefits from their employer. So chances are they're not getting their health insurance funded. They're not getting a retirement contribution made. So when you don't get that, that puts the burden of ownership on you to make those investment vehicles available and that you proceed with a commitment form.
So is there a risk to real estate agents for doing this?
Systematically going into the market is diffusing risk. You're getting a nice even share price. So that is actually a risk decreasing strategy. However, let's not confuse that. The underlying investment that is selected, that's where risk comes in. You sit down with an investment advisor and you talk about your goals and objectives, your time frame till you need the money, and how comfortable you are with risk. Once you go through that analysis, they'll match you up with a suitable product, but it's the underlying investment that sort of determines the risk.
So I like the idea of doing dollar cost averaging, and so how do I just walk me through, how do I do it?
First off, for just any of retirement planning needs, you should sit down with one of us here at the credit union and talk about your goals. We have bank products that can fund IRA accounts and things that are retirement planning for the future. I do always want to mention that when we talk about a IRA or any tax advantage product, that we highly encourage you to consult your tax advisor. If you remember previously, Rob, we talked about who's one of the important people to have on your team, and that's that tax advisor. I tell everybody that's my favorite professional to pay every year because they're the ones that ensure that I'm following tax code, I'm maximizing my deductions. So I encourage that. Run this by your tax advisor. The next step that you can do if it's outside of a credit union product, we here at the credit union have a fully owned subsidiary called Northwest Capital Management. They actually do professional investment management for our members. What we could do is set up a consultation with one of our investment advisors do want to be clear that these are not traditionally insured products because this is outside of a direct credit union product. But we can talk about risk tolerance, what your goals are. They do a full analysis and they will help you match a particular investment. So I'd encourage you to take a free consultation. For my members that are across the nation that might not be in our footprint where our offices are, we have means with technology to interface, discuss, and determine needs. So reach out to us. Let's get you in front of one of our investment advisors and let's start saving for the future.